Welcome to Dukascopy TV, I'm Elaine Stenson. The crisis in Ukraine hit markets on Monday morning, unsettling investors around the world and upsetting already temperamental emerging markets. Meanwhile, the FOMC will meet next week for the first session under new chair Janet Yellen. The Fed is likely to continue with its $10 billion tapering program. Bob Slade, managing director with FXDD in New York, joins me now to look at what the potential effects the crisis in Ukraine will have on tapering. Bob, the OECD has advised that the Fed should proceed cautiously with tapering and give enough warning so as to minimise the impact on developing economies. Do you think that this is necessary? And how much will the crisis impact the Fed's decision?
It really is a good question. There's been a lot of talk about what the Fed does or doesn't want to do. In general, a less accommodative monetary policy will certainly have a negative effect on a lot of emerging markets by reversing their investment flow, i.e., they've been doing very good with money coming into the emerging markets. We certainly don't want to stifle any of that. We've already seen some emerging market countries such as India and Turkey raising their benchmark rates due to the fact that they were having some problems with investment flows. So that's something to keep in mind. And as we just brought up, some central bankers have certainly commented that the Fed did not take into effect the volatility of the emerging markets in their taper decision. And from what I read and from what I gather and from what I see the marketplace talking about, the Fed really the Fed's job is to concentrate on the U.S. economy. Will they let emerging markets falter? Not per se. But their main focus, and you always have to remember, their main focus is the U.S. economy, not the world economy.
Okay, you mentioned that the U.S. will look after its own economy first there, Bob. But today we heard of a $1 billion aid package the U.S. is giving Ukraine to help it get through the next few months of turmoil. How do you respond to this?
Well, interesting, and Treasury Secretary Lou, who is bringing this guaranteed debt, let's see, to the Senate this week, and hopefully we get passage. This is very similar to the other aid packages that the U.S. government has given to other countries, Tunisia, Ukraine. They've Jordan. So you've seen enormous amount of support by the U.S. government, by the Treasury Department, to our allies to assist them, which is where I think the whole idea of loan guarantees going for the $1 billion for Ukraine. Mostly, they're looking at this to cushion the impact of the economic policy changes that the IMF are going to insist for Ukraine to get the loan package they're seeking through the IMF. So I think a lot of Secretary Lou's thoughts is this can be a buffer to allow them to move forward with the IMF loan guarantees, because we both know the Ukraine, certainly, even though they have a very big loan package from Russia from last November, it seems that could be in question about where that goes.
And finally, Bob, just how much has the crisis affected the global markets and perhaps jeopardized economic recovery in the major economies?
Well, we both know when the news first came out, the markets fell dramatically. Oil spiked along with natural gas. It was most unsettling to most market participants. Basically, the emerging markets are certainly adding a little nervousness to the average investor in general. So this just added a little bit of extra stress to them. You're seeing a lot of investors in the emerging markets moving some of their assets to the softer asset classes like U.S. bonds or Japanese currency. But when you ask about what does it do on a global economy, you have to remember that Ukraine only makes up 0.2% of global gross domestic product. Where I think you'll see an enormous amount are the stocks of some with more direct exposure. For example, the oil stocks, ExxonMobil, Shell, BP, who all have major properties in Russia and the Ukraine. But I think we're also going to look at Europe's economy needs to be very concerned, because I don't know the exact figures, but I know some 25%, if not more, of oil and natural gas that roll from Russia into Europe roll through the Ukrainian pipelines. So it's a very it's a situation that has to be handled with kid gloves, to say the least.
Okay, Bob, thank you as always for joining us, and that's all we have time for now. But do check back for more interviews coming up. Bye for now.